Hi guys, welcome back to our global interviews. This is Starlight here, and today I'm in Germany for the Derivative Forum Frankfurt 2022. And I'm delighted to have Bill Biller for today's episode. Please welcome Bill.
Hi guys, it's my pleasure to be here on your YouTube channel, and it's always nice to be back in Frankfurt, which is my hometown, and yeah, looking forward to the questions.
Can you share with us about your background, how you got into the crypto trading, and as the head of the trading at BitMEX, and what your job involves?
Okay. I am by profession, I'm a derivatives trader by profession. I've worked 20 years in the classical TradeFi industry, having worked for multiple banks, mainly trading equity volatility. And I left the industry in 2017, and then my friend ventured. My first crypto venture was actually a mining farm in China, in which I invested. And after this project, I ended up setting up a consultancy firm where I was basically advising high net worth individuals who were investing into crypto as well as into fintech. And with my trading background and regulatory background and risk management background, I advised crypto exchanges on regulations, on risk management, and on new products that they basically wanted to bring. So what's my job at BitMEX? I basically run two teams. There's the risk management team that effectively is hedging the commissions that we're receiving at BitMEX that come in, that we hedge. Further on, we basically manage all the surplus cash flow, which we invest 100% in crypto. And then I manage another team, which is called BitMEX Link, which belongs to our Swiss entity, where we've applied for VQF license. And we intend to offer there to our clients a possibility to trade crypto spot with full fiat on and off ramp capabilities.
Mm-hmm. So can you talk more about the BitMEX and what the BitMEX stands for and what you guys can offer?
I think what does BitMEX stand for? What can we offer? I think number one, what I have to, of course, mention is we invented the Perpetual Swap. So I think we brought the most traded crypto derivatives product in crypto land. We invented it and brought it to the market. And I think the Perpetual Swap helped the crypto market grow substantially, because suddenly you had a product allowing you to hedge your long crypto exposure, which then would lead to new products getting set up, because suddenly you could sit there and say, okay, I've got a crypto portfolio which is partially hedged or not hedged, and you could then start lending out some of your coins. So I think gradually the market's starting growing. What do we as BitMEX stand for? I would say we want to make the crypto investment as easy and as seamless as possible for any investor who wants to come in and basically invest in the market. We want to make their user journey as friendly as possible, but also help them understand and educate them in the best possible way, so they understand which products to invest, what's the difference between the different products, and how to best maneuver through these markets.
Is it BitMEX platform is a beginner friendly?
I would say yes, but of course I'm biased. Maybe you should ask your users about it. And again, I think we have got a bit of a different user base compared to maybe some of the other exchanges. Many people I talk to who have started trading crypto many years ago are very strong evangelists and believe in BitMEX and the BitMEX platform. Mm-hmm. I personally think there are a few things that could be better. I think our user interface, I know my colleague's going to now basically a little bit, not happy with me, but I think our user interface could be better. Mm-hmm. But I still think otherwise, in terms of pure trading, it is a very good platform, very seamlessly. I think what we do is we offer good leverage to basically give clients a good exposure to the market if they want to, and our liquidation mechanism is very robust. So, the chances of you ever losing money on BitMEX is impossible in that sense. You cannot lose more than what you've invested. Of course, if the market goes against you, it's gone. But we clearly would not have a situation where we would ever come back to clients and say, oh, by the way, you still owe us some money. This can never happen on BitMEX.
According to your previous job, you work in the traditional trading industry for a really long time, more than 10 years. So what do you think the big banks and the mainstream institution think about the crypto, such as Bitcoin, Ethereum?
I think there has been, of course, a lot of development over the last 12 months. I think where many banks were sort of still looking at crypto a bit with sort of reserved distance. The huge amounts of issuance of ETPs and the ETF that was issued in the US on not on Bitcoin Spot but on Bitcoin Future, of course, changed the perception of banks and forced their hand, because you would have more and more clients asking, well, I would like to trade crypto. Do you offer me possibilities? And suddenly the banks was, of course, looking and saying, hey, we have to get involved. We have to understand what is happening. This market is growing. It's evolving. We cannot just, put it off as a Ponzi scheme. Yeah. And I think they've all sort of started waking up to it. And I think across the board, you'll not find a single bank that does not have a digital asset representative that is out there trying to understand what the bank could do, how the bank could get involved. I further think if we come to blockchain technology, I think blockchain technology has been already adapted by the banks for a while. You can take, for example, JP Morgan. JP Morgan settles a lot of the internal swap transactions between different entities on blockchain. And they actually use the ERC20 protocol, where they've got their own spin-off for that one. Yeah,
even like as we can see in this event, there have a lot like a traditional trading industry people come to this event and to get to know the.
Yeah, this event, I used to come to this event many times in my old capacity as a TradeFi derivatives trader. And I think this is the first time that Eurex invited the crypto industry as well to participate. And you could see in the various panel discussions and forums, the amount of people that came into the crypto panels to listen to what was going on was actually quite big, because I think this is now probably one of these conferences where you've got established TradeFi meeting crypto for the first time. Yeah. Especially the ones that might still be a bit reserved. Yeah.
What have you done to enhance the BitMEX trading system?
I could tell you, but then I had to kill you. No, we are constantly trying to improve our trading system. It's an ongoing process. At the moment, I can't go, of course, too much into detail because it's too proprietary, but at the moment, what we're looking at latency, how we can basically execute on multiple venues faster, because, of course, we don't only trade as on BitMEX. If we start hedging parts of the exposure, we trade on other exchanges as well. So we look at latency times, and we try to optimize our hedging and trading algorithms in sense of how we send orders to the different venues, how we pull them out, and how we execute these orders, because every crypto venue's got a different, slightly methodology, how they look at things, how you have to execute the orders. And we're trying to optimize, of course, our trading process in a way that it is the fastest possible way, in the sense that if we want to send an order to the market, just purely to be able to take advantage of volatile markets in that sense.
Thank you for sharing. We know the cryptocurrency is kind of like really unpredictable. And so as the trader, like, how do you predict the trend?
It's a good question. If I really could always predict the trend, I would not be sitting here. I would probably be in the Bahamas now on my yacht. So I think, again, it is not easy to predict a trend, but of course what we do is we've got many proprietary systems that we use to analyze the market. We look at on-chain data, we look at off-chain data. We take all that data together, plus we use also, of course, third-party research tools that we access to look at things. And all that one technically gets all thrown in a big pot. We steer it around, and then we start taking individual parts out and then define a strategy based on the data that we've got or that we see. And sometimes you can see trends clearly there.
Yeah.
But you really also need to understand where to look and how to look. And it is not that easy sometimes to be done. It is also, again, very much depending on the existing market situation, the market volatility, and what is the existing trend and problem. The Lunar Terror crisis made us look at different sets of data numbers than compared to when we were, if we would be looking at Bitcoin or Ethereum and things like this.
How do you analyze the crypto market and trading?
In how do I analyze the crypto market and trading?
Yes.
As I said, I think it again is for us a lot research data. We use our own analytical tools that we have built. As I said, looking at off-chain and on-chain metrics is where we then take all this information, look at it, analyze it, then look also at third parties, compare that with what they're saying, and then we try to predict things. Some things is easier done, some things less easier done. It's also a question about what markets you look at. For example, at DeFi, you have to look at different things. Like if you look in classical SEX trading in sense of if you talk about a centralized exchange. But of course, we also look very strong at on and off-chain data effectively to see really what is happening, where the coin's moving, are they moving, what wallets are they moving in? So is there more trend of people taking coins out of the exchange or coins coming onto the exchange, which usually is again then a sign of that there might be selling pressure coming. Further on, you also look, of course, at funding rates. Usually funding rates is a good example also. Is there a big demand or is there less demand? And these are the things that we look at to understand how to position ourselves, or if not position, to hedge ourselves. Mm-hmm. I think this year is a difficult year on the trading side because, of course, we have the problem that we have been coming off highs we've done in November, December last year. And basically since January, we've been basically dropping off. We rebounded. We're now further down. I think there's a problem with a very high correlation between crypto assets and NASDAQ assets. I think that trend will not be broken for a while. And based on that, at the moment, it goes very much into one direction.
As we know, there have a lot of cryptocurrency in the markets right now. And like Dogecoin as the first meme coins. Do you think it is the good for investment? And do you think it's going to be reach over $1 and why?
Now, I have to say I personally have struggled with meme coins. So I have stayed away from any meme coin investment. And we also, on our side, do not hold any exposure in any meme coin. Now, I'm not saying it's wrong. I'm not questioning. I think there's a good reason for meme coins like Doge or Shibu. I just struggle to understand it. I'll be very frank. Now, do I think Doge can go back up to $1? Yes, everything can go up again. I think just a lot would have to happen. I view meme coins as a great side product of the market that had somewhere a reason to be there. But I think meme coins can only flourish in times where there's surplus asset or liquidity in the market that is happy to go into a trend or story like this. So I personally do not think that Dogecoin will be hitting $1 till the NASDAQ does a new all-time high and Bitcoin does a new all-time high. I think that might be then the possibility also for Dogecoin to start rallying. Mm-hmm. But till to that point, I do not think it's going to happen.
So which one do you think is good for investment?
Well, not a Dogecoin or a meme coin, if you ask me. What's good for investment? I think, again, I don't really want to start calling up, individual coins. I think you have to put a lot of work and effort into it to understand what the protocol is, what it's trying to achieve, which market it's catering to, in sense of what problem that protocol is trying to solve and who is basically offering it to. And I think there you can then maybe start extracting value. Of course, Bitcoin and Ethereum will always be the bellwether coins. And if you are someone new and you're coming to the market, you need to hold them. Mm-hmm. I personally think Bitcoin here at these levels is a good level to start accumulating. Could Bitcoin go lower? Yes, I think if the NASDAQ starts selling off further, I'm certain that Bitcoin will get a bit more under pressure. But if you ask me on the long-term horizon, will we see new all-time highs? Yes, I think we will see new all-time highs. Will we see them in the next 6 months? I don't think so. But if you are willing to sit and wait a bit longer, yes, I am a strong believer in cryptocurrencies, especially in the ones that have got a real use case and value to be offering.
How do you feel Luna price drops as the stablecoin, and what do you think it represents?
I think the Luna Terra debacle, whatever we want to call it, clearly reminded us that stablecoin is not stablecoin. There is a difference. Is it a custodial stablecoin? The other is a non-custodial stablecoin, like what Luna is. As a algorithmic stablecoin. I think, unfortunately, Luna basically got caught in a, as we would call it, the perfect storm. And the inflation mechanism that basically pushed Luna to all-time highs of $100, purely in the back of huge demand for UST as a stablecoin, then was, of course, also Luna's downfall once people started withdrawing their UST and wanted their dollars back. And this pushed the market down. I think what then also didn't help is that the Luna Foundation basically purchased a lot of Bitcoin with their capital, which of course then in the falling market made them basically exposed to two assets. They were exposed to the falling Bitcoin price and they were exposed to the falling Luna price. And suddenly things got much more difficult for them to stabilize the price. On the long run, I think algorithmic stablecoins will struggle to find an existence going forward. Although I think we need to differentiate between Luna and, for example, if you look at DAI as another algorithmic stablecoin, which is of course much more stable. But why is it stable? It is over-collateralized, number one. And number two, it is managed by a DAO, so it is totally autonomous. And suddenly the logic or protocol of that stablecoin cannot be changed from one day to the other. You know, it was never intended when basically people started investing into UST or started basically purchasing the stablecoin. No one started talking at the beginning, oh, by the way, we'll use the money and start buying Bitcoin with it. So I think this is where you have to understand the difference. And, you know, I think still, again, it was a very painful exercise for the market. A lot of money got basically wiped out in the space of the week. But yes, a lot of people got hurt. It was not nice for many people. I feel sorry for a lot of the retail investors who lost money there. But, you know, it's not like in the classical TradeFi world where people are calling, yes, we want to be bailed out. You know, why does the central bank not step in? What's about regulation? And do we have to get involved? Yes, clearly, people should have maybe made a bit more their homework, understand the difference between the two stable coins. But I think that's, again, the beauty about the crypto world. It is very much self-regulating in the way that if suddenly people lose belief in it and move out of it, it could fall to zero. But everyone who was in it knew what was coming. Mm-hmm. And it's not that, you know, where you sit in sort of semi-TradeFi world, you start suddenly calling for the central bank to come for rescue and bail you out by basically selling, purchasing bonds or anything else to basically support the market. We do not have that in crypto.
If the beginner want to get involved in this industry, do you have any tips for them?
If the beginner wants to get involved in crypto, I think read. Understand what you are purchasing. Try to look at the light papers. Try to understand the protocols. Try to understand the difference. What is that protocol trying to achieve? What is the focus of the protocol? Who's using the protocol? And which market event will then make that protocol / the underlying grow? Because, you know, partially you can view a crypto coin like an investment into a .com, not a .com, but basically into a new fintech stock. Yeah, you're investing into a project that these guys are working on and trying to grow. And I think then if you understand the different trends, like, for example, what happens with NFT, what was the story about Solana, why these things were growing, what they were trying to focus at, it's much easier then to invest accordingly instead of just going and saying, oh yeah, I've bought this and that. Why have you bought it? Because someone told me about it. I think that's wrong. I think you should try to understand it yourself. Further, I would always say never hold more than 5, maximum 10% of your portfolio in one underlying. I think the only two you have to exclude out of this one is Bitcoin and Ethereum because they're just the benchmarks and you should be holding bigger stakes on them because they're the bellwethers. But if you're buying altcoins, never buy more than 5 to 10% of that. And the other thing is probably if you are a new beginner to the market, whatever money you might have, don't invest it straight away on day one. Invest it gradually. Probably maybe set yourself limits where you say, you know what, I'm going to buy on a bi-weekly basis or a monthly basis. I'm going to invest X% of the intended allocated capital into investing into crypto.
Mm-hmm. Yeah, I feel like if you want to trade in the crypto, you should not put all of your money in the same industry. Just like it's danger and it's going to be another story.
Yeah, exactly. You have to diversify a portfolio because, you always otherwise will end up, a little bit too much. So because, yes, I do know someone who said, I'm all in Luna. And that was a long while ago. And I haven't talked to him since then, but I'm feeling a bit sorry for him. I think this is it. And I think also, if you invest, on a bi-weekly, monthly basis, yes, you might be buying maybe on a high, but over the time, you gradually will average your purchase price and you'll take advantage of this. Mm-hmm. And I think you will be at the end laughing and saying, actually, it was a very good investment.
The last questions, but not least, what is your goals for the rest of this year?
Goals for the rest of this year, of course, it's very much focused on our exchange. So we've just launched Spot Exchange, which is a new product because BitMEX usually has always been much more derivative focused. So we, of course, want to increase the volume on our Spot Exchange. We tended to trade most of our spot not on BitMEX because we never had a Spot Exchange. So we'll be going to other venues. So probably that volume that we've been putting outside of the exchange will now start going to BitMEX. Mm-hmm. We look forward to that, adding liquidity to the market. We are looking to launch the BMEX token as a tradable product in the next 1 to 2 months, where we as Arrakis Capital are active and really involved in the whole process of making sure it comes right the right way. That's basically one of the things. And of course, we want to grow our market share. We used to be one of the top 5 crypto exchanges when it comes to derivatives. We're now just in the top 10 and we want to be back up there again. So we want to do everything that is possible to start growing our market share and give the big boys on the top a bit of a run for their money.
Perfect. Thank you guys for watching today's episode. If you like the content, please like the video and leave the comment down below and subscribe our channel. And thank you, Bill, for coming today.
No, thank you very much for inviting me. It was very nice talking with you and answering your questions. And bye-bye.
Bye.